monitoring. Highly flexible and scalable software, enabling the lender to analyze large volumes of data as per requirements. Scormy, a leading fintech company in India. Get in touch to know more.
Virtual session. Unlocking potential, digital payments role in India's economic development. Moderator: Mr. Praveen Khanna, Vice President Alliances, Scormy Solutions. Eminent speakers: Mr. Amit Kumar, CTO Executive Director, EaseBus. Mr. Kumar Amit Sinha, Co-founder COO, Kasla. Mr. Rohit Katyal, Chief Business Officer, Fee-commerce. Mr. Topendra Bhattacharjee, Chief Business Officer, Probe 42.
You are talking on mute, Praveen. Yeah.
Hello and a very warm welcome to our esteemed panelists and our audience today on this pertinent and a very contemporary session about unlocking potential on digital payments and its role in India's economic development. We are joined today by an esteemed panel of members from the banking, fintech, and financial services industry. And it'll be our honor and privilege to learn from their deep domain experience and their journeys in the growth of the digital space from an India standpoint. Now, before I invite the panelists to share their views, just a few highlights on the enormous growth of digitization in banking and payments in India. Now, there are two positive themes that are running in India. One is the investment in the physical infrastructure, that is the roads, rails, the airports, and the changes that we are witnessing. And then there is the investment in the digital public infrastructure. Digital banking and fintech is increasingly becoming omnipresent today. There are about 700 million users who are accessing internet via mobile in India, and that is estimated to reach almost 1.5 billion by 2040. It is estimated that digital transactions will touch 72% of the total financial transactions by 2025, exceeding paper-based transactions, which will be down only to 28%. If we look back at the history of payments innovation in India, there have been a continuum of innovation in digital payment space right since the 1980s and 1990s. So 1980s, the check clearing was first introduced in India. Then the ECS service comes into existence in 1990s. There's the issuance of the credit and the debit cards by banks in 1990s. There's the advent of ATMs and internet banking, which happened in the early 2000s. The introduction of the national financial switch, the RTGS and NEFT, which came into being in 2004. And then within the last decade, there's been a rapid innovation from a digital payment system standpoint. So there's been, obviously, the government has established NPCI in 2009. As a consequence of NPCI, you've seen the launch of the Unified Payment Interface and the BHIM app in 2016. NPCI is now obviously recognized internationally for the major impact it's done, both in terms of the governments, and that the government also has been in active consultations to extend it to other countries. During the journey in the last 8 years, RuPay has made a significant impact as well on the access of card-based payments, which was earlier a privilege that was enjoyed only by customers of top banks and bottom-line customers. With the launch of RuPay, this has all changed. Today, there are over 1,262 banks, including private banks, public sector banks, small finance banks, cooperatives, and regional rural banks, which are offering the RuPay cards. UPI has been a huge boon to the customers. The platform, of course, supports interoperability, is active 24/7. There's UPI QR and the merchant QR codes, which is enabling access to payment services to merchants. It's very cost effective. There's enhanced security. It's completely open and interoperable. Digital payments in India has continued to have a healthy run rate of year-on-year growth. It's grown 58% in FY 22-23 as compared to FY 21-22. UPI obviously continues to be the flag bearer here. Amongst cards, credit card transactions, volumes has also seen a year-on-year increase of 30% between the two financial years. So while the earlier era was paper-driven, cash-driven, and with customers having to reach out to banks, the advent of fintech and UPI and the banking payment apps has enabled taking banks to the customers and making banking available 24/7. So again, we are privileged to have quite a few members from the financial services and fintech industry. First up, I'd like to invite Mr. Amit Kumar. Mr. Amit has over 15 years of experience in data engineering, data science, and scaled architecture. He's currently CTO and director at EaseBus, a fintech company that provides payment solutions for businesses. He leads product engineering and innovations and delivers scalable, secure, and user-friendly products. Amit, of course, has also the pedigree of prestigious institutions like IIM Calcutta and BITS Pilani. Amit, if you could share your 180-degree view from a payments landscape standpoint in India, and then also talk about the new innovations in digital payment space. What are some of those promising technologies and platforms which will help the users in the years to come?
Yeah, thank you. First of all, thank you, Resurgent and ScoreMe Solution for organizing this event and having me here. So as you said the context aptly that all the numbers you talked about really talks about the innovation, or you can say transformation journey a country, not just country, the whole economy and the global interface is witnessing. So we are blessed to be present at the time when the dynamism is that when the whole transformation is happening at this point of time, and we are playing a part to create an impact in these times. So yeah, that's really a nice, you can say you can say at the right time and at the right place. So we are into that scenario. Coming back to the innovations in the payments which is happening. So if I remember, when we started our journey in 2016, where we were solving some digital problems which businesses used to have, where they were not having proper IT support, or you can say that the capital to invest in information technology and the understanding to manage all of the business complexities around. So when we started, we started building the platform, and then we kind of got engaged in building up the payments layer on top of it. And then it was an infinite ocean, and when then we got deeper into it, and then we are established payment player at this point of time. So while this was happening, we have gone through a journey where traditional payment systems like cards were at the paramount at the time. 2018-19, when NPCI really took off some of the products, and as the numbers really kind of says the credibility of those products, not just changing the behavior. There were three things which is happening and in the country. So one thing which was happening, as Praveen or rightly kind of pointed out, that digital public infrastructure was coming up. Parallelly, the internet revolution which is happening not just in India, across the globe, that has also given that kind of leverage that the digital adoption was happening, and parallelly digital payments and the other pieces kinds of get solved by itself. Third thing which is happening is the government is formalizing the businesses as well, where all the regulatory compliances and and that too is to make a point that we are building a strong economy and the country itself. So the think tanks, and they have really put in a nice effort, thoughts, and really shaping this thing to to take off next 10 to 15 years. And that's what we can see, and we are looking at $10 trillion market now. So that's where so this is not possible if we are not innovating. So, being a small company, a startup around, we always have kind of known that innovation is only thing which will create value to the customer, and that will only get you paid. So that's where we have always had that genesis, that we would always keep the innovation and the value offering or at the top. So that's why we have remained profitable from last 7 years. So and coming back to the whole ecosystem, as in the innovation and ecosystem involvement is phenomenal. Like, not just UPI as a product which has kind of, there are several other products which has come under UPI. Like CC on UPI is just rocking, really making waves out there. Credit line on UPI, which has just struck, and UPI 123, which has really brought in the rural population, rural population on the UPI rails. That has really blown wonders. There are other innovations which is also happening, like from the security point of view, because once the whole population is getting to digital, the risk exposure also is increasing, where the innovation cannot sustain if it is not regulated or controlled in some manner. So where tokenization, Alt ID, 3DS 2.0, all of these initiatives has really gone smoother, and every participant in this ecosystem has kind of not just complied. Everybody's worry was not to affect the customer sentiment, not to affect the customer convenience. And I don't see any news coming out saying that customers suffered because of the 3DS 2.0 rollout. Although there are some some payment instrument which was really risky, like recurring card payment solutions, and there are certain mechanisms. Although there are points where the restriction has come, but yeah, that is for the larger good. But the other innovation which has kind of came into an RBI is very keen to move things around, which is CBDC. Like, there are 7 to 9 banks which is live on CBDC stack. It is not just saying that this is just a POC now. Now there are millions of transactions which a CBDC Rails has witnessed, processed, and now the thing is, it's not just getting limited to the domestic. The CBDC has the potential to connect global companies, global infrastructures, and that's which will solve the larger problems, which our economy and the whole business world is facing. And when we talk about cross border and the digital currencies, these are massive problem to solve, and not just this will help the B2B market, because that's some market which is still untapped, and where there are not just problems around the payments, the problems around around creating efficiency in the business workflows, right? So there are a lot of things which is still managed in some manual way, but people are now, since governance is getting strong, so now every business is trying to adopt some automation somewhere, so that compliance cannot be on a risky ground. So that's something which everybody is doing. There are super massive transformation is also going on e-commerce, like ONDC is coming into the into the picture. Parallelly, NBBL entity which has come out from NPCI for handling BPS on B2B rails, that has also kind of started adding a lot of problems, adding a lot of solutions to a lot of problems which are normal businesses were facing. So all of these are working so cohesively that since I am a payment aggregator, I do get access to all of these mechanisms, and we wrap around all of these accesses in a solution and build a product market fit solution which really solves a complex problem outside. And if we really talk about the biggest opportunity which is coming on our way is the complexity. So any business which is growing, which is becoming complexer, right? By either replicating on geographies or bringing additional revenue channel in same business model. This is requiring a complexer solution to handle that. Because if you look at customer, customer centric approach always says that whatever complexity which is getting forward to customer, you have to handle in the back end of yours, and so that customer is still facing some intuitive and very simple interface. So that's really require a lot of innovation, and Indian startups and the players are really doing a great job around. And of course, like Fi Commerce, and we are also a user of Pro 42, so we are a happy client there. So that is not just helping us in meeting up compliances, that also helping us in creating several other revenue channels where we learn data well and create features and product, because the next set of innovation is going to come only based on data, right? The requirement will die in some day. So that's where we are focusing. And as EaseBuzz, we are focusing by focusing on meeting up the customer requirement by offering them a verticalized solution, right? So thing is, how we look at payments layer is that every segment has their own problems, and if we can involve business workflows plus the payment workflows plus the financial bundle, so all of these three components really solve the larger problem of business, which is the real need of the market, right? So yeah, so that's from my point of view. Probably if Rohit wants to add something, he has also been a great, understanding in payments area. Yeah.
Wonderful, wonderful. No, I think some excellent themes that I've also captured. Rohit, please go ahead. Please go ahead, Rohit.
Yeah, I'll add to what Amit said. When we were just about to start this conversation, he said that we can talk a lot about innovations. What I personally feel is an unending tale of unending innovations, you can say, which is not only bringing convenience to customers, to businesses, since the business where we are into are B2B in nature, and B2B2C in the journeys, right? In the customer journeys, it even aids a lot of commerce. So this has always gone hand to hand, and it's a time of collaboration. I keep talking everywhere, whenever I speak. The time is about collaboration. The time is about data, right? Rightly summarized by Amit in the end. The next phase is all about data, and data along with collaboration will be a very strong proposition. So today it's a time of innovation when bank is collaborating with the fintechs are collaborating with regulatory bodies, players like national schemes in picture, contributing. So it's an ecosystem push. So you can't always talk about one set. It's an ecosystem push. Everybody is trying to strive and bring some of the other new factors and parameters or which aids the entire money movement when it comes to digital payments. Right.
No, in fact, I wanted to ask you on that, Rohit, itself. Amit rightly mentioned about UPI 123 and the focus on the rural theme. I think that is one digital divide that we constantly hear about. The urban is progressing and is steamrolling ahead. Are we leaving the rural customers behind? And I mean, your thoughts on the penetration, both from a payment standpoint, from a digital standpoint, from a rural India perspective, because that gap is still there. And what strategies could you suggest from that standpoint?
See, I mean, you look at the urban India, we are very clear that when you talk about the divide, I mean, urban India has always been faster in adoption of any technology, right? And this is purely because of the infrastructure which has been present. So on the other side, when I see rural now is faster picking up in the advancements. When I'm talking about the digital payment tools which are being introduced in the rural India. So UPI 123 is a part of a digital tool only. When you talk about, right? So this all talks about how we have been basically now giving answers to the challenges. So I'll talk about challenges more to start with here. I mean, when I see the challenges, the first challenge was that sectors in the rural side of India, or you can say the rural sector, agriculture plays a very big important role. And farmers who have been trading, this sector has more cash ingrained since fundamentally from the start itself. Farmers today also use primarily, they deal in cash because they have to buy raw materials. Typically, they have to in the trading, in the selling, in even resource management of field labors at the fields. Everything fundamentally, the trends are these guys are dealing in cash. But then on the other side, government has been playing a very important role by implementation of the incentive schemes, programs for the rural sector. On telecom is playing a very important role in the digitization of this side of India, where internet connectivity is now into an improvisation stage with 5G technologies in place. It's playing a very, very crucial role here. And digital payment side, all the fintechs are towards more and more of POS implementations, introduction of soft POS, QR-based platforms or mobile payments have of late gained tractions. But where here I typically mean is the digital infrastructure has been on rise now in when it comes to the rural side. The second important thing where I have to focus is towards the formal banking. I mean, I have been a banker with from last it's 2.5 decades. I started my career in the banking with one of the top banks as my previous employer, and I found that when you were talking about the entire journey of the innovations from a CTS till today, where we stand, I mean, formal banking infrastructure in rural and semi-urban markets has always been a challenge. So this challenge today, I mean, the earlier it was lack of branches or functional ATMs were more fundamentally in nature. Today it is changing, and large chunk of the rural population is moving from an inactive, you can say an inactive stage of formal banking services and participating towards more of the new innovative digital methods like AEPS, which are Aadhaar enabled, which are and with the UPI real-time penetration in picture, is giving a very high scope for a digital push and the strategy around this.
No, perfect. Very, very, very rightly said. I think the role of AEPS, the growth of telecom, I mean, just to share a quick number, I was reading the internet growth in the rural market is almost 30% CAGR. That is the kind of growth that we are seeing from a rural market perspective. And clearly that is driving the growth on the digital penetration side. I'd like to invite Mr. Topendra at this point of time. Topendra, of course, is the Chief Business Officer at Pro42 and was, of course, a banker with roles at RBL and leading digital transformation initiatives there. So Topendra, I mean, I just wanted to understand your perspective, your 180-degree view from a payment standpoint, and the role and impact of NPCI from a digital payment score in evaluating and promoting digital payment services in India. Go ahead, Topendra.
Hi. Thank you, Praveen, for having me here. You can. Hello?
Yes. Please go ahead.
So thank you for having me here, Praveen. I think this is a great, I have a couple of co-panelists who are extremely learned and very well placed. From a payments perspective, of course, they have all spoken about, we've been speaking about the way the entire environment has changed over the last 1 decade. And the kind of innovations which have happened which was where the fintech play happened, and the fintech got in the entire customer focus side of the piece in one way, while on the other side there was the government or the regulator, as well as government and government owned agencies who built the road rails to enable this innovation. And this enablement actually has scaled the entire payment space ecosystem in India. I mean, whatever we see today. Now, this may sound a little global till the time we go into the brass tacks of the entire piece. And both my colleagues here have actually mentioned quite a bit of them in gross, basics. But if you look at it, on one side is the innovation which is happening, through which there is penetration which is happening of the payment space. Now, while the penetration is happening, means there is adoption of digital which is happening. And adoption has been led not only through payments, but actually through use of digital, various, spaces where digital has advented our lives, both in terms of India as well as Bharat. So on one side, Rohit mentioned about AEPS and Aadhaar-enabled other services as well. So that is one part of it. On the India side of it, you have had, various spaces where we've got services which have emerged, which we did not think about maybe 10 years back. I mean, even the basics like Ola and Uber that has become so, ingrained into our lifestyle today was not there earlier. Everything now has moved in that direction. And therefore, I think the regulator has envisaged the growth, and therefore came the need for the referee that we were speaking about in the pre-session, conversation. So while on one side there is a role, the rails, the guardrails which have got built, the rails which have got built, parallelly there are some guardrails which have also got built. And that is very critical in this environment, because I can give you a few examples of my, during my banking days, where, with innovation, with payment adoption on digital, the vulnerabilities across grew as fast. And therefore came the need to actually control in some format these vulnerabilities. And because of these vulnerabilities, we saw people losing a lot of money. I mean, the users were, losing a lot of money because of that. Now, having said that, while UPI has been growing at a very, very rapid pace in terms of adoption. Hello?
Go ahead, Topendra.
Yeah, sorry. So while UPI has been growing at a lot of at a rapid pace of adoption, frauds around UPI has also grown at the same pace. Okay, we talk about UPI 1, 2, 3. We have talked about card on UPI, credit on UPI. We all these things are actually growing more and more adoption. Therefore, in 2021, RBI came up with something called DPI, which is the Digital Payment Index, which gave some visibility of how the country is growing in terms of digital payments and in the digital payment space. The observation is that we are growing at about 11% year on year in the DPI index, where the index actually covers 5 elements. The first is the payment enablers. Second is the payment infrastructure on the supply side. Third is the payment infrastructure on the demand side. Fourth is the performance of this payment infrastructure, which is the mainstay of this entire thing. And fifth is the consumer centricity of this infrastructure. Now, if you look at it, this index gave some visibility of how fast the payment space was growing in the country. Now, that is one part. That's the first part of it. Now, if you look at another economic visibility, economic index, which is how was retail credit growing within the country? Okay, So today you have credit card penetration at about 7.5%, if I'm not wrong. Okay. Um, Now with that kind of card volume, okay, and that too, I think in the last 1 year with some of the fintechs who issued a lot of cards, this number has grown rampantly. But prior to that, it was still much lesser.
Much lesser. Yes. Yes.
Okay. Now I don't know the exact numbers of growth, but that is the time when a rapid growth happened. Now, having said that, the carded population actually was very limited, especially because credit was not available, okay, for everybody's use. Now with RuPay coming in, like Amit mentioned, with RuPay coming in the way in which it has started developing and building a rail around, which is more domestic, made in India kind of a rail, taking on Visa and Master quite a big way, quite a big way, and also access for building a credit product around, around larger cohorts of customers has emerged due to this. I mean, we also heard about, how many banks have now access to building cards or card products, banks and fintechs. So that has also come in a large way. So what NPCI now thought of, which was announced last year, is the DPS, which is the Digital Payment Score. Now, what is the DPS? DPS is essentially a score based on the payment records of an individual, and that payment record will, in different types, in types of payments, in sizes of payments, in number of frequency of payments, etc. So now this will enable an add-on to the credit score of the individual, and therefore there could be a larger population which could come into the credit fold. And if you look at it, there are 2-3 things which are playing together. One is your credit on UPI. Second is RuPay creating the rails. And third is the digital payment index. All three put together is actually growing together to enable more and more credit offtake in the retail space. And that would help the entire ecosystem to flourish in a very different way. So today with UPI doing 10 billion transactions a month, I think it's more than that now. It anyways has led many non-users to adopt digital and build on digital. I mean, days of COVID are gone, because of which there was a stage where, we said COVID propelled digital, but I think that is behind us now. Okay, now it is more organic in nature. And because the masses are seeing it happening in the right format and the entire efficiency of it, like I said, in DPI, one of the biggest weights are given to functioning of the infrastructure. So because, when you do a UPI and the UPI transaction goes through more often, is where the user has become more, used or, hooked onto it. And the convenience is coming on board. I mean, it's like it's playing in. And it is the real user who is actually now getting into the play. So therefore, all these things together is actually helping build the ecosystem. And the ecosystem has got a huge lift because we have such a strong player behind it, which is the NPCI.
Got it. No, some very, very important points. I mean, I wasn't aware on this digital payment score side. And I think if that can really help on the credit offtake in India, that'll be really, really big. Rohit, you wanted to come in?
I mean, thanks for giving a lot of light, from the Pinterest side. In fact, I wanted to add certain points. When we were discussing about the payments index, I will throw light something on. Again, I'll go back to the rural. That's where the NPCI see the entire light, right? So next stage of massive growth has to come from rural, which is still at a very nascent stage, and NPCI is pushing their various initiatives towards this sector. And the reason is, I'll give you some of interesting insights here. See, rural market with formal banking being a challenge was more largely working with the credit societies. I mean, you see the cooperative banks, rural cooperative banks play a very, very important role in the entire ecosystem, right? There are more than 1 lakh rural cooperative banks, what we call these as the physical, typically these are primary agricultural societies, we call them, right? And interestingly, they have 38 crores of customer base, which is 50% of the Indian bankable population. Now, this is where the entire thing lies when it comes to more digital push. Today, RBI is looking forward for next 3 years that if there are the touch points can be increased to 30 lakh, or the POS, physical POS machines can go up to 1 million, or almost 2 million of digital acceptance points. These are certain targets which RBI has taken for a couple of years to go further, and they are wrapping in with the UPI space along with the NPCI, fintechs, and banks. I mean, interestingly, I was reading that more than 800 cooperative banks are in a process of joining the APS platform to promote the seamless banking transactions, and basically participating in the financial inclusion in the semi-urban and rural areas. And this will really help for the bottom population, which is 40% of the bottom population, which is lesser than 1 lakh per annum of income. And this will be a place where today they want to target and increase the penetration of it. So some of the interesting insights coming off late from this sector.
Wonderful, wonderful. Just to follow up on that, Rohit. So while it's admirable with the kind of potential that we have and the increase in the penetration that will happen, what about safety and security? I mean, that will be a big concern going forward, right? With the kind of frauds that happen. So your thoughts on that front?
See, India digital payments market is projected to triple from 3 trillion to 10 trillion by by 26, right? And everybody is talking on every platform about these numbers, no doubt about that. I mean, this surge is in the digital payments definitely has brought a corresponding increase in the fraudulent activities, but will keep increasing also. And it is actually posing a significant challenges towards the security of financial transactions, or resulting in various forms of cyber crimes, like phishing, you can say, like malware attacks. I keep hearing about OTP frauds these days, or very latest fake UPI linkages. I mean, these are really bound to happen. So I see this as there are 3 important pillars to secure digital payments. One is the fraud management, the second is the security, data security, and third is the compliance act. So all of the 3 typically act as cohesive pillars when it comes to the security or digital payments. So when I talk about the fraud management, it is very key for the payments business. I mean, these days, everybody, including the organization where I represent, we have a very robust, secure platform today, or anybody who's other than FiCommerce is in the business, they are setting up dedicated risk management teams. We are using a lot of FRM tools while processing the transactions. Still, cyber criminals will keep seeking opportunities to steal valuable personal and financial data. I mean, that will keep going, and this is somewhere we have to adhere to the referee. I mean, when we say the referee means the regulators. So adherence to the privacy and the data security standards set by the regulatory bodies are very pivotal in this case. And if you have seen last month only, I mean, in the first week when RBI governor announced that central bank is going to issue guidelines for the for basically a principle-based framework towards authentication of digital payments, right? So these guidelines will be more towards the AFA, the additional factor authentication, as a part of the monetary policy committee. So these initiatives government is taking. When it comes to the best practices which can help us, I mean, see few points. I can contribute few points here. Amit will be more technical expert, but data encryption protocols like SSL or TSL, these authenticate and encrypt the data movement on the web are very important. Then being PCI adherence to the PCI compliance piece. At FiCommerce, we are providing the complete tokenization solution. So tokenization itself is a solution which helps the sensitive card information to convert into tokens for an exchange of a transaction processing. So this is another type of a practice where we always keep pushing the merchants and the industry towards it. FRM tools which are monitoring the fraud continuously for the business continuity. Then implementation of 3DS, 3D secure, especially for the unauthorized, to prevent the unauthorized use of cards and prevention from the chargebacks, especially when I talk about the e-com space, which is growing at a faster pace. Combination of strong passwords with MFA, multi-factor authentications is among the practices. I mean, there are a lot of practices which are adhering, which are a part of regulated guidelines, and there are so many tech deployments which we are also doing as a part of the industry, fintech industry, to preserve and prevent the fraud activity, especially in this area.
Yeah, just to add to what Rohit told, there are a lot of pieces Rohit already covered in kind of how the risk management things are happening. But if you look at very broadly, so there is a risk exposure which can come with the collaborations, right? So where there are different stakeholders involved, right, while the transaction processing. So there are different initiatives recently gone, like tokenization, Alt ID, guest checkout implementation, and 3DS 2.0. So this was requiring the improvisation in the setup which we had earlier, right? So there are different partners involved, and RBI has to direct everyone saying that this is the deadline for you, and you have to meet to these criteria, right? So one part which has really massive initiative which has gone. The second part is how a PSP, a payment service provider, can make their system secure, and and it is both how you make system secure by your infrastructure, by building your infrastructure, how you, or building cybersecurity risk management frameworks, or you by incorporating several tools like transaction monitoring and other stuff like an FRM, a comprehensive FRM suite, which is now a mandate and everybody is to comply. Third piece, which people often looks, over and now, not just NPCI has really, cracked that a lot. Like people awareness, like financial literacy is very much important. That's not just what a business or a ecosystem partner has to do. Now, even our education system has to come up and bring that kind of talks and you can say lessons or structure around, so that our whole population now I don't know how often you carry your wallet. I do not carry my wallet, right? So thing is now everybody is now moving from cash to cashless society. Now everybody has to be aware of how to protect themselves from the from different type of fraudulent activity which can happen. But yeah, just to give a prize to that, the kind of efforts which has been put in both from regulator and all the ecosystem participant, the kind of structure in infrastructure or the tools established is really a massive, like I can say we are sitting at a very high level of the benchmarking if we set ourselves at the global, in a global index, right? So if you talk about African countries, fraudulent activity, Topendra can talk about it. Like, Africa is, there is the settlement cycle takes a month and more than that, right? Just because of, handling the risk. We are now, in a way where we are settling funds on the same day, like T+0 is something what regulators are asking. Is it not possible, right? So this is kind of infrastructure and the setup we have created for our country and which we are offering to outside world, and which has been, recently in the news that, more than 9, 10 countries who are adopting our infrastructure.
Correct.
So that's a piece which we have kind of brought in. Yeah.
Right.
Yeah. Rohit.
So in
Topin,
fact, I
sorry.
mean, Amit pointed out about the digital financial literacy also. I mean, thanks to the national schemes and everybody, especially talking about NPCI, I mean, we have been actively volunteering with the non-profit organizations along with NPCI, where we are partnering for digital financial literacy programs in rural communities, and where the education is towards the tools and the knowledge for secure digital transactions. And these are typically a practical sessions which are aimed to explain the digital finance and inspire the safe practices. So it's not only about tech or infra. These efforts are also being pushed from the ecosystem on these on the lines which we are talking about.
Wonderful, wonderful. Topindra, your thoughts on safety, security, and perhaps even on digital literacy, because that gap is always there,
Yeah, I think, thank you, Rohit and Amit. I think you all have elaborately explained quite a bit of, the entire compliance that is required, and therefore, leading to security on the platforms across the board. I think that is fantastic, actually. I just wanted to touch upon something which is building up, and a fundamental issue that I had observed in the business that I was running inside of RBL. So we used to do digital onboarding of customers across cards, loans, and liabilities products as well. And also on the payment side of it, there was a lot of digital onboarding which was happening. Now, what we realized when we saw the frauds going up, we realized that the typical operator or a bad actor, he actually does the fraud by either stealing an identity or synthetic identity, or creating sort of a technology piece which is like a bot or something of that sort to enter the funnel. And once he enters the funnel, then we give him the keys anyways. I mean, he gets access to operate his property, whatever he's got into. And then is where he commits the fraud or executes the fraud. So one interesting thing that we did, and we really were reasonably successful in doing that, was we created an ML-driven model which sat on the top of the funnel to stop bad actors. And this ML-driven model was typically variables which are outside of the regular variables. These are like alternate variables. So like Tor network, device quality, and so on. So there were a number of variables that we picked up, and we created a model on top of it with it, and therefore created this model which sat on top of the funnel. What it essentially did is it actually reduced the entry of a wrong actor through obviously the the BRE that we had set out there. The rule engine actually defined quite a few things, and unsupervised AI models which actually defined the trends. So what we could achieve out of that is we reduced our fraud considerably. And when I say considerably, I'm talking about numbers which are much more than 60%. Okay. That is, of course, there is a catch-22 there, where आप कह सकते हो कि गेहूं के साथ गुण पिसेगा. But at some point of time, we had to take that call because the economics of the business went haywire because of the frauds which are happening. So this is a perspective that if we can manage things at the top of the funnel, which is also what the regulator is trying to do in many cases. But if we can hold it at the top of the funnel, there is a lot of scope of managing the fraud right up there. And today we have AI which is actually supporting these these models which can be created. And I think both my co-panelists mentioned about data being very, very critical. And I'm also I'm of the full opinion that the entire innovation now will be driven by data. and with the data at the core. And here also what I'm talking about is, managing the risk through data rather than, I mean, it's more a pre-facto than a post-facto kind of a scenario. And in payments, most of us, I think both of you will agree that, we chase velocity and velocity-led frauds to begin with, and then reach out for the bad actors most of the time. I mean, that is how we operated in most of our cases. But today that is changing. And today, with actually the volumes, I mean, imagine 10 billion transactions a month on UPI. I mean, it's not a small deal. With those kind of scale, you cannot behave in that same way as you did earlier. And like I said earlier, with adoption of digital, vulnerabilities are increasing manifold, and we have to stay that one step ahead. It is difficult. It is extremely difficult, but we'll have to keep trying. And that is where the entire intelligence around data comes in, and building models with these kind of data variables, etc., would help us stop some of the bad actors.
Yeah. So I just add one point, and I know we are falling short of time as well. But so as Subhadra rightly mentioned that the predictive analytics and bringing post facto activity to pre facto is something which will not just flourish the market. This will really bring that kind of innovation. So one innovate and I skipped that payment mode in the beginning, but BNPL is just riding on this, right? So BNPL is one of the product which is where somebody who is purchasing a product on, even in big basket, if you are doing grocery shopping and you are availing 400 rupees loan, you can say loan from the BNPL instrument, that really requires a lot of massive processing which needs to be worked behind.
Absolutely, bang on.
Yeah, that too real time. So this is that, and I would say, and every industry which has been regulated recently. So everybody, post regulation, their rules are clear. Like now the rules are clear. The ground is set. Now the innovation which is happening around is really to beat that kind of convenience or the competition which world has never seen earlier. So BNPL and we are kind of working with Amazon. There are different kind of
while Amit, you mentioned big.
Tupendra, yeah.
Go ahead, Tupendra.
Yeah, please, Dupin.
Sorry. So while Amit, you mentioned about BNPL, I think the requirement is not only in BNPL, but all direct onboarding kind of, businesses everywhere. I mean, I'm just adding to what you're saying. Totally. So for example, personal loan, credit cards, we today have all STP onboarding. We are not seeing the customer. Right. The moment you don't see the customer, the vulnerability scales many size up, many folds. And that is where whenever there is an onboarding of that sort, you really need something which needs to evaluate certain things out of context so that you can be sharper in who you're onboarding.
No, definitely. That's why the data will become the core offering in future, and everything will revolve around data. So and then when we talk about BNPL, so we also launching Tata Pains in couple of weeks. So where Tata is coming out with the product, and they're launching their product on our platform exclusively. So there we have kind of put in all those kind of mechanisms like Tupendra you mentioned, device fingerprinting, that too keeping all those metadata checks, and having a pattern recognition or predictive algorithms behind it, so that you do not get involved with the fraudulent customer or the intent behind, right?
Perfect. I'm conscious of time. I think we're nearing towards the end of the hour, and of course we can go on and on. So just some closing thoughts, Tupendra, starting with you.
So I mean, I think we have spoken enough about all the facets. So there are three facets. One is technology. The second is the guardrails, and the third is the security part of it. So if with all these three things playing in tandem, I mean, and the scale and scope which is growing in terms of the way in which payments are growing in India, digital payments are growing in India. I think we are moving very fast in that direction where um, maybe we don't become a cashless society, but especially retail payments, the dynamics have changed manifold of late. I mean, if you look at two more data points, sorry, I will take a little more time. If you look at UPI versus debit card, suddenly debit card usage has dropped while UPI is climbing, and therefore the less carded population has started taking the way forward in terms of digital payments. One pointer is that all the front end applications, why has UPI taken off is because of the user experience. I mean, onboarding is foolproof. I mean, it is like, very simple. So right from a sabji wala to a executive in a large firm, all of them are using towards it. I mean, look at the difference in the cohorts of customer base. So that is a big learning to all payment providers, especially PSPs, to actually build the applications in that format where, onboarding. Of course, we can, counter and say that, at many times the RBI, the regulation doesn't allow us to maybe do that, but there are ways to build it, and that's how we should go. Thank you so much.
Perfect, perfect. Rohit, thoughts from your end?
I mean, it's great insights which Topendra has given. I would like to add here. I mean, we spoke about the platform, data, securities, everything. What I want to put a light is the time is coming is now time of catering to the phygital market. So you see now, as we said, it all started with online only players or e-com players. And then the traditional businesses post-COVID has started moving from physical to digital. So everybody is converging. The online players are going towards having a physical presence also, because now everybody has understand that it can't be only a single led strategy of being in the market commerce, right? So phygital commerce plays a very important role, and omni-channel experience when it comes to payment platforms is the crux to it, is very crucial. I mean, when we were talking about innovations when Amit started, FI has also been working towards large enterprises and the omni-channel experience. And the reason we identified this, that this is a space where everything is converging with a true experience for the customer. And for businesses, it is a single stack.
Right.
In tech integrations, it is a single stack in terms of recon or reporting structures. So see the convenience, it's both sides.
Perfect. Amit, last thoughts from your end?
Yeah, I'll just continue to what Rohit said. So basically, the larger market which is going towards the complexity where they have offline, online, payments which is happening together. They were looking at the problem, customer interfacing problem, and there is a problem with their supplier, their distributor, and everything together, right? So now the need for all of our players like us is to handle both and everything together, so that they can, because it's not just whatever they are collecting from customer it should be controlled. Whatever they are paying to their distributors, whatever inefficiency which is there in the back end, that should be also sorted out. And there comes that reconciliation challenges, there are a lot of challenges which is business originated and business you can say business closer. Those needs to be sorted out, and that's the larger game to be or that's the largest market which is coming up now.
Perfect. I just want to thank all my co-panelists, for sharing this excellent discussion and for this engaging discussion on the growth of fintech and payments in India. I think my key takeaways, the positive role that the government is playing. I think that has come out very, very clearly through this discussion. the growth from a technology standpoint in terms of the growth in mobile, the internet coverage in India, and of course, the key role that UPI is playing from a rural standpoint and from the phygital market, that Rohit clearly enunciated. And of course, the safety and security. With almost 10 million transactions happening on a month-wise basis, the safety and security from a customer standpoint will be key, and fraud prevention will be key from driving this growth forward. And there, the use of AI, ML, and the kind of pattern recognition that technology companies and fintech companies can develop, that'll play a huge role going forward. So I really, really appreciate the time from all of your perspective. And until next time, it's bye for now. Thank you. Thank you so much for today.
Thank you.
Thank you. Privilege. Bye-bye.
Thanks,
Yeah,
guys.
thank you so much. Thanks.